I think when it comes to money, Bitcoin is, clearly money, and nothing's going to compete with Bitcoin being money. And historically, we see that money typically is a winner takes all game. So I don't think that we'll see anything that takes on Bitcoin for the kind of store value, monetary premium properties that it's established itself with. I agree with you wholeheartedly on the ETH stuff. I think where they messed up was kind of trying to pivot into this whole ultrasound money thing and then competing with Bitcoin as money. I don't frankly think that, Ether is money, and this whole idea that, all of these things need to try to be money is kind of silly. It'd be like saying that, all the companies in the tech bubble were competing with the US dollar.
Imagine a world where real estate investing is no longer limited by geography or financial barriers. We want to buy real estate properties and then we want to rent them out. Who's going to put up the money? How are we going to start an LLC? Who's going to do the governance, right? Who's doing what? But for now, all you need to know is that we've started a community and we talk about real estate as an investment, similar to what we do here on The Savvy.
In this recent interview, Anthony Pompliano and Will Clemente, co-founder of Reflexivity Research, dive deep into the current crypto landscape. They discuss Bitcoin's market behavior, the strategic allocation of capital among Bitcoin, Ethereum, Solana, and Memecoins, and the implications of ETF inflows. This conversation provides valuable perspectives on where opportunities lie in the next 18 months and how to navigate the evolving crypto market. At the time of this discussion, Bitcoin is priced around $66,000, showing a 4% decrease in the past 24 hours and an 8% increase over the last 30 days. With a maximum supply of 21 million Bitcoins, the current amount of Bitcoins sold worldwide is 19.71 million, leaving about 1.2 million Bitcoins available. Before we dive into this interview, please subscribe to our channel, like our video, and share it with anyone who would enjoy it. Now let's listen to Will Clement and his thoughts and insights on crypto.
With Solana for kind of the smart contract landscape, for sure. So the question is, how do you incentivize people to come on as opposed to Solana? And I think just the more competition, frankly, the better for the end user, right? As it is with almost anything in capitalism, because, you're going to have all these tough questions that have been asked over the last year and will continue to be asked about, what does an optimal smart contract platform look like? What are the trade-offs in design that you're willing to make? Maybe, what subset of users is willing to look at, using this specific smart contract that has these trade-offs versus a different market participant using a different one. So I think it's an interesting time to be involved. Yeah, I definitely think ETH has more Lindy than Sol just because it's been around longer. I think ETH probably has a higher likelihood of getting adopted by a lot of these institutions. I mean, we saw BlackRock deposit a couple $100 million on ETH as opposed to Solana. But at the same time, I think, a lot of retail market participants, again, especially I hate to keep bringing it up, but a lot of these meme coin games are taking place on Solana because it's faster, lower fees, etc. So I think you've got some of that kind of dichotomy going on from a, allocation standpoint. Obviously, if the Ether spot ETF gets approved, then I think one important thing to keep in mind is you'll probably have a lot of portfolio managers or traditional guys that are going to look at this and say, I don't know a ton about crypto. I'm going to go 70-30, these two assets because these are the two ones that got approved by regulators. Mm-hmm. So I think ETH will get some flows just from that, just in terms of like general portfolio construction and how people think about it and what they're able to access in a compliant way, et cetera. One thing I'm keeping in mind in like the shorter term is once the ETH ETF theoretically does launch, which it seems like it's a done deal after they approved the general ability to launch ETFs, they just have to approve the individual filings now, is the people that have been arbitraging the ETH spread. So ETH had traded as much as I believe a 60% discount at the bottom of the bear market. It was still quite discounted. Even you go back like a month and a half, and that was just people underestimating the odds of an ETH ETF getting approved. The question is once the conversion is allowed, what's going to be the net buying or net selling? I would expect that there's probably a couple $1 billion of sell pressure that maybe negates out any initial inflows on ETH in the same way that we kind of saw it play out for Bitcoin when GBTC got pulled out of Grayscale at the beginning. Yeah, I think there's a lot to unpack there, and it just depends on like your personal situation, your risk tolerance, what assets you do currently own. I guess I could talk about my personal portfolio construction. It's Bitcoin and cold storage that I've never touched and never plan to touch, and never plan to sell, because hopefully one day you don't have to sell, that famous Bitcoin meme with Neo. Then I have Coinbase as kind of an index on the whole crypto space.
The public stock of Coinbase.
Public stock. Yeah. I should disclose, obviously, I have a position in that. I think that's going to be viewed as kind of a proxy. Robinhood also increasingly so. I think they're kind of the biggest threat to Coinbase's business at the moment, as they've just came out last week that they're going to acquire Bitstamp for $200 million. They've seen a lot of rise in retail volumes over the last couple weeks. Robinhood originally had delisted a lot of different assets because the regulators had kind of hinted at them about potentially violating some security stuff. But if that regulatory clarity comes about, then I think you'll start to see them push back into crypto again. But I don't own any Robinhood. I think Coinbase for now is kind of viewed as that index on the space that you can at least get access to publicly. I don't own any Solar ETH, but those are obviously the two leading kind of smart contract platforms, serve as kind of an index for all the activity taking place on these chains. So, for example, if you're bullish on activity taking place on Solana and then driving demand for the Solana token to participate in these on-chain games, then maybe you just allocate to Sol instead of trying to rotate in the kind of meme coin casino, if you will. But then I'll add on the other end of that barbell. So I would say, kind of Bitcoin and Coinbase on one side. And then on the other side for me, it's just a lot of these memes that I've been more actively trading. That's kind of my base case, is Bitcoin is just consolidating below all-time highs. It's kind of difficult to say exactly how long that'll take place. Some people are saying that we're going to have this kind of, sideways summer. That's what some people are kind of, I think that the price action very much resembles late 2020. So if you go back to like the middle of last year, I posted this fractal. It was almost kind of a joke when Bitcoin was trading like 31K. And I basically just took the price action from the end of 2022 and then overlaid it on the price action at the time. And it's followed it almost perfectly, of just, partially it's just Bitcoin's gone up only as it did at the end of 2020. It's all-time highs. But then if you remember at the end of 2020, we consolidated below 20K for some period of time. Obviously this is slightly different because we broke the all-time highs, but very similar in terms of, you just have a lot of sellers at the prior highs that maybe had been holding Bitcoin for some time, are looking to offload once you get back to their kind of cost basis. And so they can kind of get out at break even. And then also just in general, market very rarely, goes up to all-time highs and then pierces straight through without rejecting at least one or two times off of that. And the other piece is just, following the derivatives data. Usually the way this stuff goes is, you get people to, get leverage long right at that kind of, all-time high breakout or whatever like key level that Bitcoin is consolidating up against. You flush those people out and then kind of go sideways until you almost get this apathy in the base of derivatives traders until they're no longer, aggressively super, long on 20x leverage or whatever it is. And then Bitcoin seems to move. So one thing I've been watching is like the derivative stuff. We've seen that cool off a bit over the last month or two, things like watching the futures basis, which looks at the spread between spot and the 3-month future. As kind of a proxy for sentiment and how long people want to be in the market, as well as funding rates, which just looks at the difference between the perp price and the spot price that the perps are pegged to through that funding rate. The only problem is now that Athena's around, and this is something Quinn Thompson has talked about a lot, Athena has kind of thrown off those measures a little bit, because it's putting downwards pressure on both the basis and the funding rate, specifically for ETH. So I think you've got to take those readings a bit, with a bit of a grain of salt. But I think the relative changes still are pretty valuable. And what we've seen since the initial run up in February is that the 3-month futures basis has come down and it's kind of, just grinding down near like 5% or so. Funding rates have kind of cooled off. We saw a lot of open interest that came in on this recent move as Bitcoin got rejected off of 72K a couple days ago, but I don't have any super strong short-term view on the market outside of the derivatives market is starting to cool off and isn't as frothy as it was earlier this year. Meanwhile, we're continuing to see inflows into the market, which is represented by on-chain data of stablecoin aggregate supplies, which is one thing that I look at pretty closely because that gives you a proxy of capital inflows, but also the amount of liquidity on chain that's being utilized in DeFi or whatever it is. And then the other piece is the ETF inflows that we started to see. So one thing I had been posting on Twitter for a little bit is the 14-day change in the holdings of the ETFs. So you had this kind of first wave up, obviously, like right after the ETFs launched, kind of cooled off. And then now it seems like over the last 2 or 3 weeks, we've started to see this kind of second move up, maybe beginning in the ETF flows. I think some of that, which is reflected by the types of participants that were revealed in some of these 13F filings, are probably just long spot and then shorting the future to put on that basis trade. So they're not like directionally long necessarily. But overall, we are starting to see those ETF.
We just heard Will Clemente discuss his insights on Bitcoin's current market behavior. Will compared Bitcoin's recent consolidation below all-time highs to late 2020, suggesting a potential breakout despite the exact timing being uncertain. He emphasized the importance of understanding Bitcoin's unique value and risk. Will believes that while Bitcoin remains a stronghold, Ethereum also presents significant opportunities, especially with the incoming Ethereum ETF. Will highlighted the influence of ETF inflows, noting that while they attract attention, they aren't the ultimate market movers and should be viewed in the context of broader trends. He also explained how Memecoins, despite their higher risk, offer retail investors a chance for substantial returns due to their cultural relevance and speculative appeal. Now, let's dive back into the discussion and hear more from Will Clemente.
Also, I would just say, like, people forget, Bitcoin's a big market. It's a really liquid market. Like, these are big numbers that are coming through, through the ETFs. We saw almost $1 billion day last week, which is the second largest inflow day since inception. But, there's still a lot of volume that takes place outside of the ETF. So I think the ETFs are something that's, a good kind of narrative or like selling point for the market to grasp onto. But I don't think it's an end all be all. We can have a down day if there's net inflows, et cetera. I also think the ETF inflows in themselves aren't really a good proxy for like where the market is going to go on like a day-to-day basis, if that makes sense. The general trend of the flows is important, but if you have one day of some certain reading, like I don't think that gives you any a forward-looking insight into what's going to take place, because the ETFs are partially just a reflection of where the market trades. We've seen people freak out because you have several days of net outflows in the market, but the market went down, people were selling, the market went down. And then also, people getting overly excited when we see inflows, but the market has gone up. Well, the market went up, people were buying. That's, you're just seeing that people had bought for the day as the price went up. So I don't really follow them on like a day-to-day basis, but I do think, things like looking at, these kind of broader trends, or maybe, looking at like a 7-day moving average or something of the ETF flows is interesting, just to see like, are we starting to see, that kind of second wave up that we've been waiting to see since that first one in those ETF flows. But I remember in 2020, it was very much, okay, you go out on the risk spectrum, those things are going to have higher beta to Bitcoin, and you just get long all the vaporware and all that stuff goes up. We have not seen that this time. A lot of the alt BTC or alt SOL pairs have just been bleeding out for several months now, and it hasn't really been as simple as just buy whatever vaporware altcoin and you'll outperform BTC because it's less liquidity and it's further off on the risk spectrum, which I think is a good thing for the market overall, because people are thinking about what they're allocating to. If I'm a retail market participant, like take myself, I don't trade with any exorbitant amount of money, and so I'm able to get into a lot of these memes, and I'd rather play around in that sandbox and trade these things where some of these things can run in a matter of days from a couple million market cap to we've seen north of mid 9 figures in some cases. And so essentially retail has the ability to basically capture a liquid unicorn, which I don't know any other market that you could do that. So when I speak to a lot of other guys my age as well, that seems to kind of be the general sentiment is, you've got Bitcoin as this hard money asset. Everybody understands that very well. That way with the ETF, I think the case for allocating to Bitcoin is, more clear than ever. And Larry Fink's gone on TV and shoulder bags and kind of, drilled down the thesis for Bitcoin. I don't think that's debated by anyone. But then you've kind of got this question of, okay, well, if I want to go further out on the risk spectrum, what should I allocate to? There's all these, very highly obfuscated, a lot of technical jargon, questions about the value accrual for a lot of these altcoins that are, mid 9-figure, $1 billion, $2 billion market cap tokens. And, the reality is the average retail participant has a very low likelihood of 10 or 15xing on something like that, but they have a much higher probability of doing so with memes. So I think a lot of people that are coming into the space looking to speculate for the first time are participating there. And then also, I guess the last thing I would add is just the pool of market participants that are playing that game is a lot less sophisticated than the pool of market participants that are trading Bitcoin. Like to have edge in trading Bitcoin, especially at this point. I think maybe this was a different story even before 2020. But I think now, you're just think about it, you're going to go play poker at a table, right? You're going to go play with, these high stakes guys that are, that have been playing for 25 years, or you're going to go sit at, the table with people on your same skill level. I think that's how a lot of people are thinking about participating in these meme coin markets as well.
To wrap up this insightful episode from Only the Savvy, Will Clemente shared his compelling views on the future of crypto. His discussion highlighted Bitcoin's consolidation pattern, the strategic allocation of capital across various crypto assets, and the impact of ETF inflows. Will emphasized the cultural appeal and speculative nature of meme coins, providing a comprehensive view of the market dynamics for the next 18 months. We'd love to hear your thoughts as well.
From what I found, it sounds like there's roughly 200 million in the tokenized real estate space. That number is supposed to grow to $1 trillion by 2030. That is insane, right? Just take that in for a second. But for now, all you need to know is that we've started a community and we talk about real estate as an investment similar to what we do here on The Savvy.